All right, hello subscribers. Today is February 7, 2020. This is trying something out. I'm gonna try and record my face as well. Some people say it helps them. Uh, that's fine with me. I don't mind to show my face. So today's video will be a little bit shorter. I had sore throat all week and I can't talk too much, but we're gonna cover these topics here. So first of all, of course, please hit the like button. Subscribe to this channel and share this video. We finally hit 100, well, I'm sorry, 1,000 subscribers on YouTube, so thank you. Um, we'll look at stocks as they hit record highs, and it doesn't look like anything can stop this bull run, even the virus. Uh, Offensive sectors are pushing higher, and this is show good appetite for risk. And we'll also look at junk bonds as the trading range narrows further. Treasuries moved back towards records and the yield curve is inverting, so I'll show you that, while dollar broke back into the bull market, but gold hasn't really reacted. And I think Bitcoin is set up to be shorted right now. Okay, so let me know if this actually works or not, if you don't really care about my face. But here it is, S&P 500 at fresh record highs. So we had a little bit of a pullback here into the previous week, and that was it basically. And new records again. So right now, I, I mean, it's just an amazing move. So you can see that we started trading it back in February. So this was the alert back in February of 2019. So close to a year already, actually about a year for this trade. We don't really care. We can sit in the position for as long as we like. Um, Here's QQQ. This one had another opportunity. The fourth, back in June of last year, and it is at record highs yet again. Again, not. I don't see anything that could. Nothing seems to want to stop this bull run. Uh, why did we decide to buy the stock here back in June? So once again, you can see that there are four lines on this chart, the green, blue, red, and yellow lines. These are my proprietary trading indicators. You can have them on your chart. All you have to do is register at MasterChartsTrading.com right there and sign up. And once you register, I'll open the door for you on TradingView. So you need free TradingView account. And once you have it, I can open the door for you so you can have the same lines on your chart. So why did we buy it here? So the reason why we went ahead and opened this position here, or I sent an alert at the very least to my subscribers, is because the indicators were showing me to go ahead and buy. And the way my um, trigger is, we see a dip below the blue line and a close above the blue line. So this is all I really need, and this was good for significant move. Let me see, for an ETF, it's a huge move. It's a 31% move in about a year. So again, congratulations if you recently opened. If you opened back in about a year ago. Same goes for Dow Jones. You can see a alert back in the 29th of May 2019, and it is again at record. So it just keeps going. Small caps, they're more sensitive economically to domestic economy, but they were still at 52-week highs, and again they're approaching fresh 52-week highs. So overall, there is not much of a divergence between small caps and large caps. Financial. So appetite for risk is good. Appetite for risk means that investors are buying kind of riskier sectors, and they're buying them even at this very high levels. You know, these are new 52-week highs for financials, XLF. This is, I would call it offensive sector. Um, and yeah, there it is again, 52-week highs. We traded this ETF as well, several alerts here back in August of 2019. The most economically sensitive sector, XLY, also known as consumer discretionary, also at new record all-time highs. The price has never been up here, and now it is at new record. So I am, we're just gonna continue buying. The trend is a trend until no, it is no longer a trend. Uh, we traded this as well back in June of last year. Alert was sent. This was good for uh, over 16%, close to 17% move. Now, what we usually do at MasterCharts Trading is we have a list, a relatively large list of stocks, and you can see that there is one alert in a year. So you're not gonna make any money just trading one ETF. So we have probably close to 200 various securities that we trade, stocks, ETFs, foreign ETFs, etc. In addition, we trade gold and commodities. So we have a wide variety of securities to select from. And then you can simply build a portfolio that you desire with the amount of risk that you desire. So, you know, right here, the alert was back in June, but there were several other alerts between them for different ETFs and different stocks as well. So you will have plenty of opportunities, excuse me, you'll have plenty of opportunities to trade. You won't get bored. Additionally, you can simply use my lines, these lines on the chart, to trade on your own. So XLY, XLK, and XLF, financials and discretionary and technology are all at records. Here's an amazing move for XLK technology, very similar to QQQ, to the Nasdaq. You can see a 37% move since the alert, which was back in June of last year. So you can see there was really no opportunity to get in my opinion, to get in uh, after the June of last year alert. But we really, again, once again, really don't care because we have many other securities to choose from. So we can, you know, open new positions should we so desire, or if we have new cash to invest. So this is basically the essence of the trend trading. We're jumping on a trend and we're staying with the trend until it stops being a trend. And it hasn't stopped being a trend, so we just keep sitting in it. So junk bonds. Junk bonds are a little bit different and they're somewhat special. They're also quite important, I think. The reason being is because junk bonds and stocks and junk bonds, generally speaking, move together in lockstep. So in other words, when stocks break out, junk bonds also break out. And you can see initial breakout here for junk bonds was back in January of 2019, and it was something similar to for S&P 500. The breakout was just around where the junk bonds also broke out. This means that they're moving together. Uh, they correlate highly to one another. Now, of late, S&P and junk bonds have been moving together, but recently you can see there was a drop starting from the, move it over here, starting from the 17th of January and into 27th of January. Not a very big move, obviously, but right now S&P has made a new high. So there's the new high right there on the February 7th, while the junk bonds have not yet made a new high. So this is a little bit of a divergence. And usually when the junk bonds and stocks diverge, we need to believe somebody. We'll see who we're going to believe. We're going to believe junk bonds. We're going to believe the stock market. So either the junk bonds will catch up to S&P or vice versa. The S&P will turn around and continue lower. The important thing is here is this trading range. So you can see the difference, the distance between the green and the yellow lines. Just a few months ago in December was 7 points right there, 7% basically. Now this same difference between the yellow and the green line right now is less than 3%. So this means that the trading range is very narrow. So before the trading range was very wide, but now the trading range has narrowed significantly. What does it mean? That means that before, for the price to travel all the way down to the yellow line, it took a long time. It would have taken a long time, and it would have taken a significant price pressure to the bottom. Such is not the case right now. You can see that right now it will take very little time and very little distance for the price to travel to the yellow line. And if it does, we will consider this security to be in a bear market. So once it closes below the yellow line, junk bonds will become in a bear market. Hasn't happened yet, and for now there is, they're moving together more or less with a small divergence. But it could happen, and now the chances of it happening has increased because the trading range is so narrow. So this is one thing that really worries me is the junk bonds. Will the turnaround in the junk bonds, if they turn around, will it translate eventually in a turnaround for stocks as well? TLT, the treasuries, are also moving towards the new records. New records are not that far off, so the records were set uh, right there in August of 2019, and very close to new records now. So a couple of alerts were sent. One in beginning of January, another one at end of January here. This is a successful trade already. Uh, and now again, the stocks, or rather the bonds, the treasuries are moving kind of towards the record. So generally speaking, the treasuries represent a conservative and safe haven kind of sector of the market. So when the treasuries are going higher, it usually means that uh, investors are positioning themselves more of a risk-off environment. So they're not as happy to be buying at the elevated levels for stocks. But we can see that right now we're seeing both stocks and treasuries approaching new records. Now the treasuries also have another kind of side to them, so to speak. So first of all, when treasuries go up, that means the bonds are, or the yield is going down. When the bonds are moving higher, bonds move higher, yields move lower. So right this instant, certain yields have moved below the short-term yield. The short-term yield is, what is it, about 2% right now. But the 2-year, the 5-year, and the 7-year yield is actually below that uh, short-term yield. This is happening because bonds of various uh, lengths, for example, intermediate bonds, IAF, also are moving towards record. So if the 7 to 10-year treasuries are moving towards records, then the yield is dropping here. In the past, inverted yield curve for example, here in 2007, and then there was another inverted yield curve event here in 2000, have led to the down market, have led to the bear market. It hasn't happened yet, but this is, to me, is concerning. And if or when this happens, we will need to deal with it. Right, the system is just showing you the relationship between the various uh, bond funds and the yield of the various securities. So let's see if it actually gets to anywhere that we should be worried about. But for now, we're simply trading it. TLT, yeah, sure, we're buying it. It actually makes very little difference what it is that we're trading, uh, so long as the price action shows that we should be buying or selling. So in this case, it could have been anything. It doesn't have to be TLT, but this price action where I'm hovering right now is showing that we are buying. We should be buying this security. All right, let's switch gears a little bit and let's look at dollar index DXY. So dollar index, I thought it broke down. I thought this was a breakdown right there, 12th of December. Never really materialized. There was a minor little move here back on December 31st, but then it just turned right around and went into above the resistance, above the blue line. So this is a breakout and again a bull market for the dollar index. So we're trading it now accordingly. In fact, I opened a position in USD JPY. Let me find it for you. USD JPY, there it is. So I went ahead and I opened a small position right there on the 5th of February. Yeah, go figure. Right now, I guess dollar is turning around and it wants to go higher. So normally, in normal times, uh, when dollar is getting stronger, so you can see this is gold over US dollar. So if US dollar is getting stronger, this currency pair, XAU USD, should continue lower. Right now, it's not happening, and of late, dollar and XAU USD has been sort of uncorrelated, which is again not normal behavior, but I'm just gonna go with it. So for now, we're trading both gold and dollar index components on the upside. In other words, we're buying both gold and we're buying dollar versus other components. It happens, but not that often. So for now, I'm just looking at this from a point of view. Okay, is a security in a bull market? This is XAU USD. Clearly it is. When did it enter a bull market? It entered the bull market way back then in January 2nd of 2019. So you can actually, I'm going to show it to you on gold futures. There it is. There's the entry into the bull market on January 3rd, 2019 right there. And from then on, we're simply buying it and buying it at the blue line. These three alerts actually happened for over, well, right now it's over 25% gain. So again, congratulations to subscribers. All right, and finally, let's take a look at Bitcoin. Bitcoin, I think, is set up to be shorted. So this is an actual alert right there on the 4th of February. Not yet. That obviously hasn't gone in my favor, in our favor, but it is a setup to be shorted. Why? Because Bitcoin has closed below the red line. For commodities, I use the red line. it has not yet closed above the blue line. So again, find out more about these indicators at MasterCharts Trading. But they catch the price action really well. In fact, we have a robot that's trading on our behalf right now. It's still in a development phase, but it is already trading on its own, and it's trading cryptocurrencies, and it catches uh, the trends really well, and we're trading on 1 hour hourly charts. So this thing can catch, this indicators can catch trends real well. You just have to believe it. Once it rolls over, I think it already rolled over, but you know, it's also, there's a possibility that it could continue higher. So if I haven't opened the position yet, I would open it on a second close below the red line on the short side. All right, that's it for this week's recap. As I keep mentioning, please hit the like button, subscribe to this channel, but then also head over to MasterChartsTrading.com, click on sign up, and sign up for one of the services. So I have 3 services right now. I have alerts, which is basically a newsletter. You get alerts such as, I don't know, Costco, for example. So Costco alert was good for over 32%. Let me show you. There's the alert. Excuse me, still playing with it. Okay, so here's the alert, for example, for Costco in March of last year. Good for close to 40% and still going. This is a type of alerts. Now, Tesla lately has been just going through the roof, but you know, it doesn't really matter what we're trading once again. Here's Tesla. I did not trade this particular stock, but you can see that it's clearly, like, you cannot miss it. All you have to do is just wait for a close above the blue line. There it is, 25th of October. There's a close above the blue line. So this is Tesla. It skyrocketed for 209%. It doesn't matter. Again, you can trade anything you like with my indicators. So if you want to trade anything you like, get the trading indicators. 29.85 per month, it's a steal. If you want to do both, trading alerts, newsletter, and the indicators yourself to trade on your own, get both alerts and the indicators. Currently on sale for a yearly subscription, so do check that out. Again, if you have any questions, please send them in. If you have any comments, also you can leave below. Subscribe to this channel and then head over to MasterCharts Trading and subscribe there. Thanks for watching and have another great trading week. Also, let me know if you want to see my face or you don't really care about it. Take care. Bye bye.